Welcome back to Everything Money. In this video, we will discuss our thoughts and show you the numbers behind Cathie Wood's investment, specifically ARKK, the ETF this year. It's quite laughable, the belief in this woman's investing skills, and we'll show you our thoughts of some of the companies that she has favorited this year and invested in compared to what we think are more wiser decisions. As always, I'm joined by Paul and Mo.
This is ARK over the last 5 years. Obviously, this chart looks amazing. But remember, guys, the big hype with ARK started right after COVID and hit right here. February was right here. We hit 150 on ARK. And the comments we got from people were, Paul, she has an ETF, you do not.
Yep.
She's managing billions of dollars, you do not. Therefore, you are stupid and wrong, which is amazing to me because I always like that argument because I just laugh about it saying, oh, so Bernie Madoff managed a lot of money. So was he better than me until 2008, 2009?
And when you say me, you really mean just the value investing approach. I mean, it's not just your thoughts.
Well, correct.
This is what you've been studying your whole life. I mean,
Not my whole life, but this is where, but yeah, you're right. So,
yeah.
You know, value investing to me was always in me, but I didn't realize it until 15, 16 years ago. So we look at this and we say, okay, it was 150 back in February. It is now 95.
Yikes.
For those of you who can't do the math, that's a fall of at one point yesterday, it was down 40%. At one point yesterday, it was down 40% from its previous high. So where's the market? Where was the market in February of 2021? Where was the S&P? It's up since then.
Yeah.
It's up since then. So these disruptive companies that Cathie Wood talks about, how disruption's sitting there, and you know, I look at this and I think to myself, okay, if disruption is everything, I'm assuming she has sold 0 stocks since February. Mo, you did some research yesterday. Has she sold any stocks since February?
She sold a lot of stocks. And you know what else is interesting? If you look through, so this has all her transactions. There are so many transactions there, and there's a lot of them where she buys and sells the next day. And but I'm noticing a lot of the sells in here. Tesla. I thought
so. Here's where I get
Tesla
confused.
was $3,000 a share, and the disruptive and going to the moon.
So here's where I get confused, then, guys. As a value investor, if I believe my story,
A great point. I know where you're going with
if
this.
I believe my story in a company and the stock falls, what do?
You buy more.
I buy more. The only time I don't buy is for 2 reasons. One, the stock has gone up so much, I don't think it's a value play anymore. Or the stock has gone down and the story has changed. Something fundamental has changed.
Yes.
I go, wait a second. Disruption doesn't change in a matter of a month. Disruption doesn't change in a matter of a week. If she has sold because the company went from disruptive to not disruptive that fast, then it was never really disruptive. Why? Because I'm quite sure Amazon has been disruptive for the last 20 years.
And the same stance goes for something like Alibaba, which has fallen dramatically as well. I see comments, people saying, I listened to you guys and bought Alibaba. And I reply back that if you liked it enough to buy and nothing has changed within the company, if the sentiment about the company has changed, you should be pleased that you have the opportunity to buy more. But this is not the case. We're talking about the initial buy, folks. Buying Alibaba and buying these hype stocks are drastically different. Tell them why, Paul.
So look at Alibaba as a prime example. Alibaba went from 320 or 310, and we started buying it at 184. It's now at 120. But the reason it's dropped so much is because of China and the delisting of Alibaba. Guess what? I don't care if they get delisted. I'm okay with that. So I'm going to buy it all the way down. And by the way, to clarify something real quick, Seth, I've never told anyone to buy a stock. What I'm doing on this channel, what Mo and I are doing on this channel is saying, here's how we assess the information. Do your own research. I will tell you what I've bought at times, and I'll tell you what I haven't bought at times, all the time. The only thing I'm telling you to buy is ETFs. Buy ETFs. Every single time I do a video, I will say, oh, this is interesting to me. Or I'll say, if these numbers make sense to you, if you believe these numbers, you should buy this stock. But I'm not telling you to buy anything. Why? Because that's not my role here. My role here is to teach a process. If your goal here is to sit there and have me go do this, then you're wasting your time. I'm trying to teach you how to fish. I'm not trying to give you fish. ARK, they're sitting here, and I will say this. I avoid ARK. Am I telling you to short ARK? No. I'm just telling you avoid ARK. When it was here, Seth, give me some news. Go back to what you saw in our videos. What did we do on the videos back in the day?
Well, the video was straight fire, Paul. I mean, we talked about, we went over what was in the portfolio, how very little of the companies, 3 out of the top holdings, out of the top maybe 20 holdings, actually made any money
17
at all.
of the top 20 holdings were not even making money. Correct. So only 3 made money.
And then we compared the revenue, profit, and free cash flow of just simple companies like Apple and Berkshire versus all of the holdings in ARKK, and the numbers were staggering, Paul.
And Seth did ask me to do this, and at first I said we couldn't do it, but let's put it in the 8 pillars portfolio. Seth, can you start rattling off the top 10 holdings of ARK?
Sure. Today's December 16th. So the first one is, of course, Tesla.
So hang on, let me add Tesla. Now what I'm doing here, guys, is this is our Everything Money software. What this allows you to do is put up to 50 stocks into an 8-pillar portfolio, and it'll give you the recap of that 8-pillar portfolio for all the stocks combined. Now, I will say, the difference between what we're doing here, it assumes equal weighting of all the stocks. In ARK, Tesla's like 8% of the ETF.
Yep.
But it's going to put it as equal. So that is a little misleading. However, it'll still show the idea of how bad this is. So Tesla, next one.
TDOC is Teladoc. TDOC.
Yep. Next.
ZM is Zoom. Roku. Coin. Ticker symbol U for Unity Software.
Okay, hang on a second. Okay.
Spot for course, Spotify.
Yep.
And then Twillo's TWLO.
Okay.
EXAS is Exact Sciences Corp. I have no clue what this is.
Okay, we need one more.
How about number 10 and number 10? Put Shopify in shop. It's just below number 10 by a smidge percentage, but this one's something it knows.
Get the stats. So what it's doing now is it's putting all the companies together and putting them in here. So guys, the current PE of these top 10 holdings is 171.
We're
171.
Typically, the market is
15 to 20.
Yep.
I look at this. There's no return on invested capital because there's no 5-year free cash flow. The last year's free cash flow is $14.8 billion on a total market cap of $1.4 trillion on the top 10 holdings. Guys, I don't know what to say here. It's just like we had a thing the other day that came on where it gave Jim Cramer's must-have stocks in the year 2000.
Mm-hmm.
Let me read you these must-have stocks in the year 2000, and let me show you where they are today. It's very, very interesting. And guess what? Jim Cramer's not an investor. He's a trader. So when I hear people ask him, like...
/ entertainer.
Yeah, he's an entertainer. By the way, I'm fine with that.
That's perfectly fine.
But he did very, very well being a day trader. Being a trader, not day trader. Well, he's not an investor. An investor looks at fundamentals. He sits there and listens to the story. So here's his top picks, must-have picks for the year 2000. 724 Solutions. Who here has heard of them?
They're a good company.
Down 99%.
Gone.
Ariba ended up falling 74%.
Oh.
Digital Island fell 94%.
Uh-oh.
Exodus went to zero, went bankrupt. Infospace fell 99%. Inktomi
I love Inktomi.
fell 99%. Mercury Interactive fell 55%. Sonera fell 81%.
Love Sonera.
VeriSign fell 75%.
I use VeriSign every day.
Guys,
Good ointment.
it's all hype. It's all everything. Must have stocks for the next decade is what he said. This is a CNBC report. Must have stocks for the next decade. Guys, it's all hype. Trust me on this one. I am very, very confident saying this. In 20 years, people will say, who was that lady who had that fund that she was all about the hype, all about disruption, and all those companies are now bankrupt? We will be saying that about Cathie Wood. Absolutely will be saying that.
Came out today and said she's going to get 40% returns the next 5 years.
She came out today and said that?
Well, maybe yesterday, but she said
40% returns a year for the next 5 years. Mm-hmm. So her top 10 holdings are $1.4 trillion. That means if she gets 40% returns, 1.4 to the 5th power times 1.4 trillion, she says those top 10 companies will be worth $7.5 trillion in the next 5 years. Keep in mind right now, the current market cap of the entire stock market is like $30 trillion. So those top 10 holdings will account for 1/4 of the current market cap of the entire stock market. Think about that for a second.
40%.
Think about that for a second. Can I ask you guys a question? Who here even knows all these companies? Who the heck's Teladoc?
Oh, they're gonna.
What does Unity Software do?
I don't know.
I only know Twilio because of software development, right? Right, Seth? Not Seth. What are you, Tim?
His name's Tim. Yeah.
So I look at this saying, guys, this is all, it's so funny. It is so clear as day to me. It's so clear as day. When I see a chart like ARK has, and it's funny because what's the NASDAQ 100 right now? Or what's the NASDAQ done? NASDAQ 100. NASDAQ 100? Since February. 1 year chart. The NASDAQ 100 is up 20% since February. She's down 40%.
Yeah.
I mean, listen, and guess what? It could go right back up and she could look like a genius again for a short period of time. But hype does not win in the long run. Disruption does not win in the long run. What matters is fundamental. It's been proven time and time again. If you want to trade, if you want to do charts, if you want to do momentum, totally different story. But for me, it's been proven that value investing works as the best form of investing over a long period of time. Absolutely does. Can she look like a genius for 1 year? Abso-effing-lutely.
She did last year. What did she return last year? 125% or something?
Last year, the year started at, that was NASDAQ. So ARK. Let's go to Ark Innovation. Let's go to the 3-year chart. January, she was at $50 and she finished the year at 127. So that's 1.5 times. So 1.5 times is 150%.
Pretty good.
2.5 times, sorry, is 150%. Yeah, it's really good. And since then, she's down. The year ended at 127. Now she's at 93. But in the first part of the year, she looked like a genius. Went from 127 to 156. Oh, genius. Disruption City. Guys, how is she down 40% then when the NASDAQ's up 20%? The NASDAQ's up 20%. She's down 40. With Tesla being up how much this year? How much is Tesla up this year?
Oh, my goodness.
Her biggest holding year to date is up 30%. The biggest holding in her fund is up 30%, and she's still down 40% for the year.
Yeah, I couldn't grasp that, Paul. The idea like you would assume with Tesla's enormous climb, it would lead this ETF, but that's just astounding.
Hey, listen, this stock will be this ETF will be a lot lower in the future.
And here's what
a ton lower.
And here's what really resonated with me. We're trying to pound it around for the young investors is you are buying a business, not when you're buying the entire business. This is the mindset you should have. A business that generates cash flow. Like Paul, I always take it back to real estate because like we've argued about what an investment is. You know, I say in the past that magic cards are investment and they always will be higher. And you would clap back as like, well, you think at times that an investment is one that pays you on a monthly basis while it goes up, whether it's a dividend or cash flow. And so the idea, if
speculation is buying something
and hoping
it goes up, and that's the only way of which you get a return.
Someone else buys it from you.
Yeah, the greater fool theory. An investment, to me and to a lot of value investors, is buying something that you have a very strong likelihood of preserving your capital and getting a reasonable return on your money based on the risk. The great thing about real estate is when I buy a piece of real estate for $10 million and it gives me a check every single year, as long as that check has a good return on my equity, I don't care where the value goes over a short period of time. What I do care about is if I can grow that income over long periods of time, will the value go up? That's pretty much it.
Yeah, so in general, we want to just pound home the idea that like we're buying businesses. And if someone would come up to you and say, would you like to buy Coinbase? Or what was the one?
Would you like to buy any business that's selling for 170 times earnings? That's what you're doing when you're buying the top 10 holdings of ARK. By the way, that's the top 10 holdings. Put them all together, I'm sure it's a lot worse than that. And I sit there and say, when has it ever worked out in history where if you buy 30 or 40 companies for 170 times their most recent year's profit, it works out well? The story's been told time and time again for over 100 years based, and the industries have just changed. And I just look at it saying, different characters, same plot. Different characters, though. Instead of being, as Pabrai says, instead of being autos, as I've said, instead of being autos and airplanes in the 1920s, and instead of being telecom and all these things, all along the lines, it's just been a different story. Now it's crypto, and now it's EV.
EV, yeah.
So when Pabrai said it, he goes, it's crypto, and I go, it's also EV. I just look at it going, okay, I don't get it. And guess what's going to happen? All you a-holes out there who in February said they didn't know what I was talking about, do you know what you're talking about now? You guys care about the short run. The short run showed that Cathie Wood is right. So the short run now shows me that I'm right.
No.
I don't believe in short run I'm right.
Now it's all about long run.
Now Cathie Wood's preaching the long run game. Well, Tesla's a value play if you believe 90% growth over the next 10 years.
And also, now we're going to start looking 5 years down the road, not 5 days down the road.
Yeah. Okay. Just change the story. I'm fine with that.
What's the take home for our new investors and new subscribers?
If this makes sense to you, what I'm saying, grab on hold, guys, because this is exactly what makes sense to me. If it doesn't make sense to you, you think I'm missing the boat, you will lose a lot of money, and then you'll remember Uncle Paul, and you'll be like, yeah, but I really hate him. I don't want to watch him. Hey, I'm okay if you hate me. Well, and to Mo's point, it's also frustrating because the hard part about value investing is what I'm doing right now, which is being told by everybody in the world that I'm wrong. And then when it finally does happen, Cathie Wood has an excuse for this, I'm sure. She has an excuse for why her ETF is down 40%, but it's never going to be fundamentals. But when it's going up and up and up, the only reason it's going up is because of, oh, I was just right. Well, wait a second. So if it goes down, you're wrong for different reasons. But if it goes up, it's right for only your reasons. Okay, sounds good. But I've always said when stocks go down, they eventually go down because something makes people want value at some point. At some point, people go, they want value and they want it very quickly. They're like, oh, shoot, this doesn't work anymore. I want value. Okay, choose your path.
If this resonates with you, following the numbers and following a long history of value investors mindset, you can join our community, get the software behind Paul, use and utilize these tools to maintain your own wealth, fire your financial planner, and get a hold of your investments.
The reason we created the software was exactly for this, because people watch the videos, want to do their own analysis when they see me do this. So we created the software so people could do this. You get everything you see here on the Everything Money channel, on the Everything Money page, all our tools, plus all the ones coming up. You get over 30 years of financial data. You get access to Seth, Mo, and I. You get all the 8-pillar analysis, that stock analyzer tool, real estate calculator, retirement calculator, 8-pillar portfolio. We can put in 50 stocks at once. It tells you how they all look as a portfolio. All of this plus exclusive daily content. We have 1, 2, 3 videos a day that we release only to our users of our software. You get it all in mobile form. All of this is available on your mobile app, all for only 90 cents per day. 90 cents per day. If you can increase your returns or decrease your losses by 1 or 2% a year, that could lead to hundreds of thousands, even millions of dollars in extra net worth for only 90 cents a day. 2 ways to sign up, everythingmoney.com or Patreon. The benefit of everythingmoney.com directly is you don't pay sales tax yet because we're not big enough. So sign up, only 90 cents a day. This is a no-brainer, less than a cup of coffee.
Go ahead, Paul.
Urban Meyer.
Oh, boy.
If you need a job.
Oh, yes, we're available.
We are available.
We're hiring.
We need a co-host.
Yes.
We don't have any hot women here for you to grab ass with, though. So,
too soon.
But Seth used to be a football player, so if you want to kick him in the face while he's stretching,
Paul,
please come on board.
The last podcast I produced,
I like Urban Meyer too. That's the funny part.
You can probably get hot women if you want. It's part of the contract.
Mo, did you know that the last podcast show I recorded prior to you hiring me was with Urban Meyer in the room next to me?
What?
Yes, for 3 hours.
Do you work there anymore?
I do not. But
okay, cool.
So anyway,
are they going to have him on their podcast talking about culture?
Probably not.
Can you slide into his DMs?
Go to everythingmoney.com. Go to patreon.com/everythingmoney. Get the software. You'll love it. See you next video. Oh my God.